The auditor shall require to evaluate whether the financial statements are prepared in accordance with the requirement of the applicable financial reporting framework. Applicable financial reporting framework is a format, is a basis on which the financial statement is prepared to meet the needs of the users of the financial information. Now, so financial statements are prepared as per applicable financial reporting framework. The evaluation shall include the consideration of qualitative aspects of the entity's accounting practices, including the indicators of possible bias in the management judgment. No comment, explain this sentence. That the evaluation will also include the consideration of the qualitative aspects of the entity's accounting practices and also indicators of possible bias in the management judgment. With the qualitative aspects of the entity's accounting practices, we can highlight this way. First of all, management will make a lot of judgments about the amount and disclosure in the financial statement. They'll make a lot of judgments. So first and the foremost thing is that the management will make a number of judgment about amounts and disclosure in the financial statement. SA 260 contains a discussion of the qualitative aspect of the accounting practices. In considering the qualitative aspect of accounting practices, the auditor may become aware of possible bias in the management judgment. There may be some bias in the management judgment. The auditor may conclude that the cumulative effect of lack of neutrality together with the uncorrected misstatement may cause the financial statement to be materially misstated here. So what auditor may become aware of that the possible bias in the management judgment. There may be a high possibility that may be a bias in the management judgment. And because of the cumulative effect of lack of neutrality together with the effect of uncorrected misstatement, now this will make the financial statement materially misstated. So it may become materially misstated here. So now what are the indicators of the lack of neutrality? What are the aspects to be considered actually? There may be what you can say the lack of neutrality may be like say one is that there is a selective correction of the misstatement brought to the management attention during the audit. So there is not a complete correction of misstatement, but there is a selective correction of the misstatements. Correcting misstatements with effect of increasing the reported earnings, but not correcting the misstatement which has an effect of decreasing the reported earning. Now that is a very shrewd way of looking at things. So you correct all the misstatements which which increases the earnings. Example, there is an omission of sales, you correct that. But if say depreciation provision is not provided, so that's a selective approach can be adopted by the management. And also the possible management bias in making the accounting estimates. So there may be a bias involved in making the accounting estimates are nothing but there's a lack of precise means of measurement. These are all accounting estimates are approximation of amounts and disclosure, and it lacks a precise means of measurement like say provisions, contingent liability. SA 540 addresses possible management bias in making the accounting estimates. Indicators of possible management bias do not constitute misstatement for the purposes of drawing the conclusions on the reasonableness of individual accounting estimate. So whatever indicators of management bias, it will not constitute any misstatement for the purpose of drawing conclusion on the reasonableness of individual accounting estimate. But they may affect the auditor's evaluation of the financial statement as a whole, whether the financial statements are free from material misstatement. So it will definitely have an impact on the auditor's evaluation on the financial statement as a whole, that is it free from material misstatement. And that is why the qualitative aspect has an impact, and it management bias and the uncorrected misstatement, it has an impact on the auditor's opinion. Okay, so let me see you in the next video.